Hello everyone, welcome back to the channel. Matt with Green Bar Trading here. Welcome back to another weekly watch list video, the first of the new year. So we're seeing earnings season starting up this week. It always starts with the banks and with the airlines. All right, so that's all going to be on Friday and then going into next week, even more so as we get into it with those bank earnings. So that's what we're going to see here with the earnings for the week. Okay, so now getting into the economic calendar, because this is something that we never want to forget when we're trading, investing, whatever it is, we should be looking at the economic calendar to see what is happening for that particular day. So up on the screen there is this coming week, and the economic reports and the Fed speakers are up here for each day. So it looks like Thursday and Friday, those are going to be the big inflation numbers days, right? So you have the consumer price index on Thursday. You have the producer price index right there on Friday. Now, inflation has come down. Yes, it's come down fairly decently, but this is still something that the Fed looks at. They study this stuff just like the jobs report. And this goes into what they're going to do with rates, right? Are they going to cut rates? Are they going to keep them the same? Well, this is all information that they take into account before they make their decision. So big day for the markets on Thursday, big day for the markets on Friday. So that's your economic calendar right there. All right, now taking a quick look at the SPY, right? I call this my compass because this is the S&P 500. So this is something we definitely want to pay attention to. Up on my screen here, first, this is a daily chart. Each candle represents 1 day of trading. I have the 20 EMA, the 50 moving average, and the 200-day moving average. Those are the indicators I really like to use. I look back. I like to see what it has done in the past, and then make my decisions on what it might do in the future. A lot of these indicators are used as support, and then if they break them, they're used as resistance. So, and I also like to use, I don't want to forget, the relative strength index. So the RSI, when a market is very overbought, you have the potential of a pullback. Same thing when it's too oversold, then you have the potential for the market to go up, right? As we saw here at the beginning of November. So right now, the market was very overbought. We had a great November, a great December. Now we open up the year and we're starting to pull back a little bit. Now, if we zoom in here, it looks like we closed under the 20 EMA for 2 straight days. Not the end of the world, but as you can see here, if you look back at 2023, well, we used this 20 EMA a lot, and it acted as support a lot until here over the summer when it started to break down under the 20. Then you saw a bigger pullback, right? A couple of months of a pullback after the market was in that overbought territory. Now, another thing that I look at is when this 20 EMA, when it breaks over the 50 EMA, right? Like we see right here, that's usually a good sign for the market to rally. Then when it breaks under the 50 moving average, as we see here, then that can definitely lead to a pullback. So we're still in a very healthy, spread out indicators here. A lot of room here. Now, that doesn't mean that the market is just going to continue going up. What it could mean is eventually this 20 EMA gets closer to the 50, which is what we saw in 2023. This is what we see pretty regularly. So this is a big gap here since November, and the possibility and potential for the market to pull back is looking pretty good. So what I would be looking for is probably around this consolidation right here. Okay, so we saw the market rejected it here, consolidated back over here in December, broke out of it, and then there's a good possibility that you see a pullback into that consolidation where there was volume. And it also happens to be around where the 50 moving average is. Now, will earnings have an effect? Possibly. Also, interest rates are going to have an effect on the market. And when a lot of expectations are for the Fed to cut rates, that's not really showing up in those Fed future fund rates. So the market is kind of not believing that the Fed will keep things the same. They're kind of thinking the Fed is going to make a series of cuts. If they don't cut and they keep the rates the same, then you may see some issues with the overall market. That's just my opinion. Doesn't mean I'm going to be right or wrong, but I like to give you guys the information that I see. Now, going over to the Qs, same thing here. If you look at the daily chart, you can see where that blue 20 EMA crosses over the 50, right? Then we have some good trading, right? It doesn't go back and cross under it until we see this, right? Right when it crosses under it, then you have a few months here of the market going sideways to slightly down. So right now, that blue indicator here, the 20 EMA, is starting to point down. It's possible that this will come into close contact eventually with the slower moving 50 moving average, right? So the 20 EMA, this moves a lot more than the 50, and it moves a ton more than the 200 moving average, all right? So something else that I'm looking at here, just take this away, is you know that I love the technical analysis. If we connect this trend line, right, with that bottom wick here to this bottom wick here, you have a nice uptrend, right? Let's just make this a little bit bigger for you guys. So you can see there, the market's in a nice uptrend for the QQQ. This is the NASDAQ, making a series of higher highs, higher lows. Even on this pullback that we saw here, still bounced and made a higher high. So is it possible eventually to test this? Absolutely, right? So that's what happens. And it could even break under that eventually. But that's where I see things now. You have the 50 here. You have the trend line and the 200 down here. All right. So what I'm seeing is more room possibly for the market to pull on back a bit before it gets bought back up. All right. So that's the key. And the timing on this is very unknown. If somebody can tell you that they can time the market, that's absolutely impossible. All right. You just have to do your due diligence, come up with your own plan, and execute it. All right. So that's a quick weekly watch list video. Hope you enjoyed. Hit the thumbs up, and I'll see you on the next one. Take care, guys.